Yeah, hi traders, welcome to New Week Ahead. We've got it all this week. We've got our eyes firmly on China, what happens to the news flow around any kind of tangible measures of fiscal support. We should see some rate cuts coming through from the PBoC in the session ahead. We've got Nvidia reporting. We've got a whole plethora of Aussie stocks to come out with earnings this week. We've got PMI numbers from a raft of different countries. We've got a BRICS summit and also the Jackson Hole Symposium later on this week. So we've got it all. Will we see higher volatility? We show you how to manage risk around this event and what's expected from the market on the video. See you on the flip side. Yeah, morning traders, and look, and welcome to the new trading week. I think, if we recast our minds at the big macro thematics that we were trading last week, of course, it was arising concerns around China, that lack of real tangible fiscal support when they promised so much at the Politburo meeting. That's going to continue to be front and center in the early stages this week. This US resilience trade, which manifested in the 10-year real rate moving up to 2%, testing those levels, and obviously a strong US dollar, and also a sterling that's been working quite well. We've seen equity markets rolling over last week, and we're obviously going to be watching that very, very closely. Now, China, as I say, is very much front and center. Over the weekend, we have heard that the PBoC and the regulator have got together. There's been a meeting and they're leaning across state-owned banks to look to increase lending and try and increase volumes. Whether the demand is there for those loans is yet to be seen, and adding increased debt to that debt pile and increased leverage in there is I think that's going to have a few question marks. There's also been a plan here to help out local governments by offering them to issue 1.5 trillion yuan of special financing bonds going forward, and obviously to help repay debts going forward. Again, adding debt to debt is that really a great plan? But we'll see if the market rejoices on that. Now that comes ahead of today's prime rate decision, where the market is expecting the prime rate to be cut on 1 year to 340, down about 15 basis points, and also 5 year down from 420 down to 405. That won't surprise. Whether that's discounted into rates, one suspects that's probably the case after what we saw from the surprise easing of the MLF facility last week. But last week we saw 5 year Chinese government bonds dropping 6 basis points to 236, and those the lowest levels really since 2007. So we've got our eyes firmly on dollar CNH. That's been one of my Bibles recently after that pulled back from 735, and the PBoC last week, continuously pushing back on that yuan weakness in their fixing, some record fixings relative to expectations last week. And also the Hang Seng, if you have a look at the daily chart here, it's broken out to year-to-date lows. Well, we see a bounce coming through there. On the equity side of things this week, we're coming out post-OPEX. So dealers who are obviously short gamma and had been hedging their delta through shorting S&P futures and individual stock names, will they be looking to buy back some of those SPOOs futures contracts in the early stages this week? I think most people are expecting a bit of a bounce there, so maybe that doesn't come just because so many people are positioning for that. But what will they do with this inventory coming forward? Now, on the stock side, we are watching Australia. There's about 68 companies coming out with earnings this week: BHP, Woodside Petroleum, Wesfarmers, to name a few. And in the US, midweek, we get Nvidia coming out with earnings. Now, obviously, the stock's up 196% year to date. And everyone remembers going back to May when the stock rallied 24% on that Q1 earnings number. And that set off this big rally that we've been seeing in AI names. Obviously, it's been accounting for such a concentration risk. Now, the implied vol in Nvidia for the day of earnings is expecting about a 10-11% move. So one there for the volatility traders. Elsewhere, we've got the BRICS summit coming out Tuesday and Wednesday. Expansion plans are very much front of mind. Their group account for about 32% of global GDP at the moment. We've got about 23 countries who are applying or are really interested in joining the BRICS nations coming forward. So expansion front and center in this group, in this union. Whether we got any kind of color on a shared currency may come out. It obviously doesn't seem to be particularly viable at this stage. It's one for the longer term situations. But headline makers will be watching that BRICS summit midweek very, very closely indeed. In the US going forwards, in terms of data flow, as you can see here, we get splutterings of sort of tier 2 data, existing home sales, claims, durable good numbers, and the S&P global manufacturing numbers and services numbers, which you can see here. Service expects about 52. But it's going to be the Jackson Hole Symposium, which is going to be front and center in Wyoming. And we get conversations coming from Goolsby, from Bowman, from Harker. But it's Jerome Powell who's going to capture the attention later on in the week. On Friday or Saturday morning, just 5 minutes past midnight for us here in Australia. Now, Powell should strike a decent balance. I think it's too early to run victory laps and say they're done. I think they still want to keep a view that they're ready to raise rates if needed. But the risk's now very much symmetrical, as we saw from the minutes playing forward. He may give the impression that they're probably done, but at the same time, want to keep the idea that they want to keep a higher for longer mantra playing through. We're also I think academics and PhDs will be looking at sort of ideas about how they're modelling the neutral rate, or the real neutral rate at the moment we'll call R star. Clearly it's higher than 2.5%, which they put into their dot plot projections for some time. That suggests to us that there's a modest hawkish bias playing through, but given that rally we saw last week in the US dollar, one suspects that's probably in the price. If we have a look at rates pricing in the US, you can see just 2 basis points being priced for the September meeting. Terminal priced at 542, so we've got 6 basis points or 9 basis points in total being priced in for that. And then we see rates sort of plateauing around those levels. And actually, it's interesting, if you're going to SOFR futures for 2024, we've only got 115 basis points of cuts being priced in for that period. Go back to the 10th of August, and then we saw about 145 basis points of cuts being priced in. So rate cuts for next year have been priced out of the market. And I think that supported the US dollar to an extent. In Europe, we've got PMI numbers coming out. Whether that sort of manifests in a weaker euro, something we are watching. And if you look at the DAX, we're sitting on clear support at the moment on Germany 40 there. Rates in Europe, we've got 13 basis points for September. Now, Christine Lagarde will be speaking at Jackson Hole, so we're interested to see what happens there. But then, that's pretty much where the conjecture is around that September meeting. So Christine Lagarde, what will she be saying around September meeting? Will she give us any clarity there? In the UK, we do get PMI numbers coming out midweek, and obviously the services number I think is going to be the big one there you want to watch out for, because that's sort of toitering in terms of expectations just above that 50 contraction expansion level there as well. And I think the pound could be quite sensitive to that. The pound was the best performing currency last week. We're watching that very closely, but as you can see here, for that September meeting, we're pricing 32 basis points of tights after what we saw last week as well. So, rates pricing looking pretty rich. We've got terminal price at 6% in the UK. In Australia, not really much being priced into the rates curve at all, as you can see here. And really until we get into sort of February of next year, we've got 12 basis points. There's not a lot that's really going to drive this week. Again, this is going to be very much a China play that's going to be playing through. So China front and centre. As we go through the week, we're going to be looking at the PMI numbers, maybe the BRICS as well, and then towards Jackson Hole towards the end of the summer, towards the end of the week, where that's where the real action takes place. Good luck.